So going the other direction and say, well, okay, you mean you're still going to keep printing the money? And I happen to think long term, just keep printing the money in the chaos of a Venezuela or something like that, and the loss of liberty. We already are sensing, and the people are sensing, a loss of liberty right now.
Take a listen to this clip.
$6 trillion we just spent, bailing out people. That was a temporary reprieve. To me, that's like giving a patient a shot of morphine because they're addicted. And we're addicted to this type of economy, and that's why they can't stop, and that's why it's going to get much worse. But we have a job, those of us who are in the business of spreading a message, as you are, to talk about sensible economics. And hopefully they'll come to their senses. I think the collapse will come. It's going to surprise everybody, because I was really surprised what happened to the Soviet system. I was in the service in the 60s and watched the Cold War very closely. And then all of a sudden, boom, it disappeared. So let's hope and pray for our system to change as peaceful as that was.
Now, Dr. Paul, let's come back to the present day. Are you suggesting then that the American economy will collapse like the Soviet Union did?
Well, we don't know that. And I was suggesting there that it can be a lot more graceful than anybody would ever dream, because in the 50s and the 60s, I mean, the conversation was, how are we going to solve the problem of a nuclear exchange? And of course, the day I was, got my draft notice was there was a missile crisis in Cuba. I mean, that was very, very real. So that is, it was a concern and still is a concern. But the collapse, I think that I'm talking about, is the inevitable collapse of the economy, because we won't be able to afford it, and that can come quickly. And the downturn can be very, very vicious. It can be very, very fast. And the only chance we have now, see, it's not like you have to be clairvoyant to predict, inflation and a recession. But the one reason why I continue to talk about it and think it's important is that it doesn't have to happen. We should have prevented it. It's sort of like trying to stay out of a war. We could stay out of a war by maybe making sure they declare the war and know what they're doing. But no, right now, the inflation has occurred. The debt is there. We're not going to pay it off in a normal, honorable, moral fashion. So we are going to continue until the market wins. The market always wins, and the market will say there will be a liquidation of debt. It's been known for thousands of years that the debt gets wiped out, and then we have to do it. But we don't have a replacement for it. Marxists that are very vocal right now, they actually like the idea of chaos, because that gives them a chance to clean the slate and start this new world order with a Marxist system. And of course, that's what we have to work to avoid. And right now, it's up for grabs.
Okay. Well, all right. So this economic collapse. Now, Dr. Paul, we've had recessions many times in the past. Recessions are normal parts of the business cycle. But what's different this time? What's different now that would lead this recession into an economic collapse?
Well, we don't know what the precipitating event will be. We don't know whether it will start tomorrow or whether it will be a bankruptcy announcement, something to it. But the bubble is there. The debt is there. And I would say the measurement of debt is the best way to tell how distorted it is, the system is. And therefore, it's fragile. It's and we haven't, it's sort of like we built this huge skyscraper, but we never had a measuring rod. So it was a mishmash. It was just building it, but they didn't have a yardstick. And we built this economy, and we don't even have a yardstick. And so the values change, and it will stop. The debt has to be liquidated. I mean, the preference I would have is, well, quit spending, balance the budget, don't accumulate any more debt. But politically, having spent a little bit of time in Washington, it's not going to happen. They're not going to do it. So the market will win out. Just like the market wins out, the government can do things to sort of suppress prices going up, but the market wins out. And the market went out with the breakdown of Bretton Woods. They artificially told us the dollar was as good as gold. And on the surface, it looked like it, but the predictions were correct. Is when I got involved in studying this in the 60s, they said the Bretton Woods would collapse. And that was my confirmation in August 15th of 71, is it did collapse. The market said, you're faking, you're lying, you're printing money like crazy, and you will not be able to honor the dollar at $35 an ounce. So, and that's what will happen to our burden of debt. We will finally just printing more money right now. You know, when COVID hit and the downturn was occurring, you know, it sort of the extra money did perk things up. People got checks, and you know, and it helped the stock market and things like that. But that's all temporary. And the comparison I made was it's sort of like a drug addict. I mean, if they're addicted, they always feel better when they get it. So when you inject the money, until the point where the patient and the economy is so sick, just injecting more money instead of temporary reprieve, you get the confirmation, we're doing the same thing again. This is terrible. The prices are not going up 10% a year, they're going up 30% a year. That's been more of the history of monetary policy than that the government and a country turns around and changes their way of living.
How would you address some left-wing policies that aim to solve the problem of not paying off our debt? For example, we could potentially raise taxes, we could potentially nationalize a few businesses to increase government revenues, and perhaps we can even pursue modern monetary theory, MMT, where we have infinite money printing that's just going to pay off our debt. How do you feel about these policies?
With hands-off position, the debt is liquidated. In 1921, we had a serious depression. It lasted for a year or so, and GDP crashed. But back then, they didn't believe in propping it up and prolonging the agony. In a year and a half, the depression was over. But what we are doing now is we prolong it. So there's a bigger bubble, bigger distortions, more regulations, more confusion, and it's a much bigger problem that has to correct, which means that there has to be a default. And the default comes from paying off all the bills with printed money. I mean, what was the reason why our government, our Federal Reserve in particular, for the last 10 or 15 years, I think it's since 2012, that our policy was, we need more price inflation. Why aren't the prices going up? They want something to help liquidate the debt, take down the real debt. So they wanted, well, what we want is 2% inflation, 2% destruction of the currency, which always never made any sense to me about that. Why would they do this? I said, well, you wait until you get 2%. You're going to have 4% before you know it. And nobody remembers when you had prices going up at a 2% rate, probably for about 6 months maybe, or not even that long. And right now, I think they're destined to go much higher. The debt has to be liquidated. It'll be liquidated because they will continue to print the money, and the debt will be paid off. Some people will just default and not pay. It'll sort of like the student debt. The student debt, that's just going to fade away because they already don't have to make payments on it. So there will be a lot of that type of default where they just quit paying. But the big default for government can't just say, okay, that's a treasury bill, we're not going to give you any money for that. We'll give you your money back. Right. But instead of giving you $1 worth of dollar, it's going to be worth about 10 cents.
All right, I'll just close the discussion on economics with this question, Dr. Paul. Suppose this economic collapse you're talking about does inevitably happen. What does this mean for the average American? How will we feel it?
High prices. See, a lot of us talk about the value of the currency, and the dollar has been strong, against other currencies because they're worse than we are. But I tell people that's not your measurement of the dollar and your well-being, because you measure it when you go buy stuff. And if you're running out of money, most people still say, we don't have enough money. Government should send me more money so I can buy my gasoline. But the prices are going up because of this liquidation, and it's a terrible position to be in to allow it to run. No politician could say, okay, just let it go. No, you have to do it. So you print more money. The big question is, which is worse? stopping the printing of money or, printing it and then lead to this runaway inflation. And there's no answer. They're both bad because they're correcting the mistakes. We will be living beneath our means. The real tragedy and the political threat is that some people will be able to preserve their wealth and even benefit. And it is true. Sometimes people get wealthier while other people get poorer. But the middle class and the poor right now, the poor are out on the streets, and the middle class can't pay their bills, and it's just starting. There's still a lot of debt. During that period of time when we tripled the money supply, prices went, or the national debt went from $10 trillion to $30 trillion. I mean, if people, well, but things are still seem to be okay.
So Dr. Paul,
they're not okay.
Just to reiterate then, and we'll move on to politics, just to reiterate, are you saying that there is no way to fight this inflation because prices will get higher, or your words, there's nothing the Fed can do, there's nothing Congress can do?
Fed is... There is. It's just politically nobody will allow them.
Okay.
No, I mean, let's say they would...
What should they do? Ideally, what should they do?
Who? The government.
The government, any branch of the government.
Well, what they should do is quit spending money, bring all our troops home, give up on the welfare state, and turn us into a republic. This is not like this is most of our lives or most of the time of of the United States existence that we had this type of system. It got much worse in the Depression, and it got much worse after we were tempted with all the largesse that we owned, because we had the reserve currency of the world. So it's a moral principle as well as any. But no, it's a terrible predicament to be in. And what I'm saying, though, is it's inexorable. It's going to last. It's going to happen no matter what the government does. But if I did what I wanted to do, I might be in office for a week, or so. I mean, the people would be so outraged that because it is such a mess. So so going in the other direction and say, well, okay, you mean you're still going to keep printing the money? And I happen to think long term, just keep printing the money in the chaos of a Venezuela or something like that, and the loss of liberty. We already are sensing, and the people are sensing, a loss of liberty right now for various reasons. And that, to me, is what's the most vital and most crucial for me is that liberty. I think if we did what I'm talking about, it would be very, very bad. But to retain one thing, I talk about investments and all. What can I do to protect my investment? Should I buy gold, have land? You should try to do all those things. But the whole thing is the most important investment anybody can make, and where I spend most of my time, is trying to get people to understand what the principles of liberty are. Because I believe if you just cut everything off, get rid of the income tax, get rid of the Federal Reserve, have sound money, and get rid of most of the regulation and just let people go, people say, I'd do pretty well if I could just keep all that money I'm making. So no, you would have a tragic, terrible mess for a year or so. But that would be the best thing to do. But politically, it will not be acceptable.